My name is Max Gagliardi, and you're listening to the Talk Energy podcast. If you're watching this video, take a moment, hit the subscribe button on YouTube, or you can follow me on your favorite podcast app, leave a review, help me out. This episode's guests are Mike Wright and Chris Sorrels, the two newest members of the Ancova team, and guys that I've known for a long time in my career and that I've worked with for a number of years now. We're excited to have Mike and Chris on board. They're going to be helping us out on our business development efforts for our legacy energy business. And I thought it would be good to just sit down with the both of them, talk about their story and how they're going to integrate into the team and some of the exciting things that we have going on. This episode, we talk about our history back working at Chesapeake Energy, tell some stories of those days. Then we talk about getting into the midstream space and what they did at their last private equity venture, how the midstream model has been challenged, and some of the things that we've seen on the valuation side, the commercial side, and where we see that space going into the future. Lastly, we talk about Ancova and what these guys plan to do and the skills that they're bringing to the team. Hope you enjoy the show. I'd like to do just sort of like the warm kind of hangout open. Can you guys hear like everything levels right?
Yeah, I think so.
So ours sound good?
Yeah, you guys sound good.
Good.
Is this, you guys ever done any podcast or content?
I believe this is my first, so.
Yeah.
So I've like attempted content like on Instagram, right? But like making a reel or something. But podcast, I've never done. So newbie.
What I found is that everybody's a little bit of a content creator, and it's just their own thing, right? Whether that's posting pictures to Facebook of their kids and they make like a collage or whatever of that, or whether it's like, you know, workout stories on Instagram or like recipes. A lot of people are like amateur food bloggers, right? Like they get like they prepare a dish or they post something like that. Other people I think are better at writing, and some of the old school content creators, like these guys that put out these energy newsletters, like the old school ones, I'm like, that's content. I mean, like a really impressive content provider is RBN. I mean, they're doing like a daily. I mean, how many years have they done that daily?
Yeah.
That's old. It's more old school, more traditional, but it is very much content. So I think that the new medium of like sit down, have a conversation, long form, it is harder to digest for people. But what I think it does is it gives people more of a deeper look into you and your story and the discussion that we're having, the narrative that we're having. And so like that's powerful. So for the people that do care and that want to dive in, I think it's a good medium here that we're doing. And I'm glad to get you guys on. I think the cool thing about having you on is that we have this history together. So I'll do like the official intro, like welcome to Talk Energy. Thanks for coming on. But
Sure.
Maybe let's kick it off with just your guys' little bit of work history, but then also weave that into how we know each other. And either one of you can go first. Go ahead.
Yeah.
You want a paper, rock, scissors, or you got this first, Mike?
I'll go ahead and give it a shot. So yeah, I mean, I started at Chesapeake in 2006. So probably Max before you, but after Chris, I believe. So went to college at Oklahoma City University, did the whole soccer thing, and didn't really know what I wanted to do. So several different Chesapeake folks would come to career fairs and different events on campus, and it was really between them or Devon at the time were the two big companies hiring from my school and probably all the schools.
This was 06, you said?
06, so right before or right during the beginning of the shale boom. I remember Barnett was a big thing right there. I think I went on a deal at Devon, and that was their big thing. I think they did a deal in like 05, 06 time to really get into the Barnett, and went to Chesapeake, started in their midstream group, and basically was one of their first midstream non-engineers. So they had several engineers at the time, and went there and more or less did jack of all trades, a lot of spreadsheet work, a lot of analysis, did hydraulic modeling, did all the AFE work, cost estimating, mapping, a lot of maps.
Sure.
So did that for probably 2 or 3 years, rotating around, did a lot of field work, going out to the field sites, meeting with all our superintendents, didn't know a dang thing about oil and gas. So basically learned by doing and just jumping in.
Absolutely. It's the best way. That was a good time. That was really a special time to hit the hit the wave of getting on at Chesapeake. And Chris, you were there for a number of years as well. Why don't you tell your story?
Yeah, and we should probably come back and like hit on like jack of all trades and like learning by doing, because I think we probably all lived through that, and that's what probably made it such a great experience for like us and others around us at the time. But I was a little bit earlier. I think I started in 2001.
Wow.
And was there almost 17 years. I loved being able to, first off, going to the company in '01, I had no idea who Chesapeake was.
Right.
And, they were growing. It was becoming a big deal, but not many people knew it yet. And so I had the good fortune, I think, of like being there initially in the revenue accounting department and, getting my hands in a ton of different things because we were all doing a little bit of everything. There were maybe 500 people total in the company when I started.
Wow,
and,
that's crazy.
I kind of prided myself, walking around the campus. I could, if I didn't know your name, I could at least kind of give you the heads up,
Right. Smaller company, but big, but like still medium size, small enough type company. Because how many of those people of the 500 do you think were in the corporate versus the field? There was probably
that's
a good mix there.
It was probably a good mix, and I don't know, maybe it was 60-40 or something like that at the time.
So relatively small, a couple hundred people.
Yeah, exactly. So, things were just starting to be built. I remember like in the interview, like the big deal they showed me was like the newspaper article, of the new building that was being built and what became the Chesapeake campus. So I think we're doing this here at an office building. This building was actually my first office at Chesapeake, was in this building.
Wow.
So
actually, I don't think you've ever told me that.
Yeah. My first office, I'm pretty sure, was a closet.
Yeah.
I'm pretty sure it was a closet, but it was only a couple months and it worked out really good. But yeah, long story short, started off in revenue accounting, got to really do a lot of different areas, a lot of different parts of the process. And then, as things were growing, I moved into myself, and then started to lead a team that did all of the accounting for the subsidiary companies and primarily the marketing company that Chesapeake had. And by, at some point before I left, again, kind of before the kind of downturn started to happen, I think we probably had in the area of 60 people working on the team. Every basin in the country and handling all of the accounting for that entire sub. But a big part of the process was, after the commercial team and marketing team had, got the gas to market, moved it through pipelines, got it somewhere sold, the big thing that we were doing was getting that value back to the well, getting it netted back correctly. And that was always for me like a big puzzle to solve and became a lot of fun. But actually allowed myself and everyone on the team to get our hands really into the process. And the only way to actually do that work was to get into the process and try to understand it. And so that's a lot of how, I got to know all of you guys and like everyone on the team. It's like we couldn't do that work if we weren't like asking a lot of questions and trying to understand how things were. So anyways, it was a great experience. Left at the end of 17, and then went to a small private equity-backed midstream startup, and came in about 6 months after they had purchased a midstream asset here in Oklahoma. And I walk in the door on day one, and Mike is there, here. And it's like, whoa, dude, what's up, man?
Yeah.
And so,
yeah, no, it was a unique and cool situation to re-catch up with you. And I think maybe so you were there from what, 01 to 17. Yep. Is that right? Mm-hmm. Yeah, I guess I kind of stopped at my beginning. So I was there doing the midstream work pretty much throughout my entire time at Chesapeake. But at the beginning it was under Chesapeake Energy Marketing, and then we had an operations group, and that ultimately turned into the Chesapeake Midstream Partners IPO, and that was, around 2009, 2010 time, which then, Williams got involved with GIP, and ultimately, I left in 17 as well. But when I left, I was fully integrated into the Williams companies. Mm-hmm. So that's probably where our paths changed a little bit, was I, around 2013 or so, we really had to stop using a lot of the services you guys were providing at Chesapeake. And that's where I got really into some of the more marketing, gas management, scheduling work, where I had to stand up an organization in 2013 that did a lot of, frankly, what like Dory was doing at Chesapeake. Mm-hmm. So that, just to kind of go through my life cycle of my time there, we were, about the same, left around the same time and reconnected around, 6 months after or so.
Yeah.
So I want to get into like the 4 a.m. midstream, the private equity backed stuff, and then some of the other entrepreneurial things you guys have done, and we can talk about those later. But getting back to the Chesapeake times, I would love to hear some stories, and I'll give you a minute to think of some if you think of any good ones from that time. But just professionally and developmental wise, that place, that time, that moment in the industry, just your guys' thoughts on how that set you up for just where you are today, what you know, and how you view the space, the energy world.
Yeah. I mean, I think I can maybe start with just a couple, and I'll be honest, there were some really, really cool things that happened there that I heard about after the fact. So there's a lot of stories that I probably, didn't get to be a part of, but
unfortunately, I don't think accounting got to do all the fun stuff that some of the other groups did.
we didn't get all of that, but it was a great place to be. There were a ton of really cool things, but I was actually thinking, and it comes up a lot actually, and so it's a story about Aubrey, and it's random, but we had that really amazing gym. I mean, it was unbelievable, and he would work out there. So I've got two stories, I think, at the gym with Aubrey, and it probably just goes to kind of like, kind of a founder, right? Like mindset, and like, kind of like part of the culture of the company. One was, I think we played like field hockey, but it was inside the basketball gym, and, he was playing on a team, and there were several that were a little scared, I think, or, to like, I don't know if I should bump into him too hard, or it's like, that's Aubrey, right? And that guy came out of nowhere and clocked me into a wall, and he's like, let's get this going, Chris. And I'm like, okay, all right. This will be fun. Awesome. This will be fun. But it's this little tiny example of somebody just doing a little thing to kind of set a culture, right? It's like, let's have some fun. Let's work. And then the other, excuse me, was I think I went there in the evening after work, and the pool was closed, and I see him in the locker room, and he was like, hey, hey, how long's the pool been closed? And I'm like, man, I'm sorry, I don't know, you know? Right. And he was like, well, did you come work out at lunch today? And I'm like, well, no, I wasn't here today. And he's like, well, did you go in the morning? Were you here to work out this morning? I'm like, well, I was actually. Was it closed in the morning? Well, now that you think about it, it was closed this morning. Did you work out last night? Well, I did. Was it closed then? No, I don't think it was closed then. Okay, so it's been closed today. Yeah. And it's like he wouldn't let me off the hook. I couldn't just say I don't know. It's like he dove in a little bit more.
That was him in like all meetings. I don't know if you ever meetings with him. He seemed to be that kind of questioning, prying. He always wanted to ask you questions until you stopped having answers. Right?
Yes.
Like, give me everything you have, and then once you've exhausted every answer, I'm good.
And it wasn't in a mean way, right? It was just getting more information. And that's a weird story about going to the gym and like, was the pool open or closed? But it kind of stuck with me. It's like that. Yeah, he was trying to get information, and he got the answer at the end of the day. I could have walked away and said I don't know, and he could have let it be. But that's not how it was.
Yeah, no, that's a great story. I think first thing, speaking of the gym, I mean, I was always pretty active in college. Playing soccer all my life and all of that, and showing up day one, I didn't, I thought, super corporate environment, probably not a lot of opportunities to maybe have a lot of that fun. But lo and behold, my first day, they said, well, we started a dodgeball team, so we need you to come later after work, go home and get some clothes and come in and let's go, throw some balls at one another and have a game. So similar story. It was like, wow, okay, so these people all just no holds barred, go all out in these events, and just a super competitive environment that maybe I didn't fully appreciate, but got fully up to speed really quickly of how much the work and play was intertwined at the company. So
he was so focused on like all these little details throughout the time that I was around him at Chesapeake and then at AEP, one thing I remember that stood out in my mind, just a random story, is that he had to have been like 2 weeks in. I was really early on the job, very early. So still just like not knowing even culturally. The campus is like intimidating. You're like, can I go in this building? Am I allowed to walk? It's like there's just so many different, you know, places you can go on the campus, and you kind of have your route that you take. And I remember going to the Wildcat breakfast place. I think it was called the Wildcat.
Yeah,
right?
I think so.
And I get in there, and it's like in the morning, and I'm still feeling my way around. I'm like, I think I'm gonna go try this, get some breakfast. And I was there early because I was just started. I'm getting there like, you know, super early in the morning, and go in there, and Aubrey's like back with the cooks, and he's doing something. Like, I'm standing in front of the grill and like talking with them as they're like cooking something, and then he's going to this other person on the wait staff, and he's just back there like, you know, having a conversation with the cooks and with the wait staff, and clearly discussing something around either the way they're cooking or what they're cooking. I don't know what it was, but he was having this conversation. I just remember being like, that's really odd that this, you know, at the time billionaire CEO would be doing that. And then I remember too, he also, like, as he was walking out, the one thing I did hear him say, he was like, who's setting the music today? Who's this? He was asking about the music, and he's like, and he went back and like changed the music to some classical rock thing or something. I don't know. But I just remember thinking like, that's really odd. That he would be that in the weeds. And I saw it too at AEP. And I think that is like some of the things I've taken away from that is that there is a powerful element to a leader that is plugged in with his people and is there. But being somebody that's, you know, had to lead organizations, it's like, I also don't know how the guy did it. I mean, to be that in the weeds, it just is like, sometimes you just have to have the faith that the machine is, that you've built the machine in the right way, that it's going to run correctly. So just an enigma of a person, and learned a lot, and learned things that I really like and have taken with me, and the other things where I'm like, I don't know that I would do it that way. And I don't think that's a knock on him. I think he was so dynamic, you could take a lot away.
Yeah, and I think that's true with most people, right? You know, it's like there's, you know, amazing things you can take away. There's things that's like, I don't know if I would do it that way. Right. And it doesn't discount at all, you know, what their ability was as a leader, as a grower of a company, or as an influencer in the community. I mean, I kind of, now driving through that area, and I'll probably reminisce a little bit, you know, I probably have a really, you know, maybe biased, really good view of the impact that Aubrey and Chesapeake had on the community. But you drive through like that general area of the campus now, and I remember sitting in meetings, and there was this vision of what that area could be, and it wasn't oil and gas related, right? It was all of the real estate development and all of the housing and retail and everything. It was the community, and it was building up something there that, you know, was a great draw for great talent for the company. So I mean, it had a tie to the company for sure. And I don't think he got to see it fully fulfilled. And you drive through there now, and it's like, it kind of every once in a while comes into my mind, like, wow, I think he'd be kind of proud of like what that is now. And the same thing at the river and different parts of the city. You know, I'm glad there's other companies and people that have really kind of stepped up into the void, you know, of helping Oklahoma City grow and kind of have that vision and kind of that philanthropy, you know? Yeah. So,
I mean, gosh, yeah, when I started, I mean, I don't know how many of those, you know, newer buildings were there when you started? Any of them?
No, I mean,
was it all just the square? What was it called?
It was, what was it called? It was something square.
Chop Square?
Three Chop?
Yeah, something like that. But those small little office buildings there.
Those were the original, and they were building what was in the Wildcat building. Like, accounting went to that building. That was the first one that was built. And I remember the first gym that we worked out in, it was a company that Chesapeake had acquired that was next door, and they had a gym. And so that was the very first gym. That was kind of fun.
Yeah. I couldn't keep count. I mean, towards the end, it was like every other, you know, couple of months there was a new building going up, and, you know, well, what's this one? 7, 12, 14, you know.
I got confused.
It was crazy. So we've talked about like the visionary aspect of what was going on at that time, but also just let's talk about the pace of development, the amount that people were pushed. I think that Aubrey and Chesapeake, they, you know, and Tom obviously was there as well at the beginning, had this vision and wanted to build this community and do all these things, but they also were extremely hardworking and expected people to be there. All, you know, they expected you to work hard, and they expected people to be pushed. And it wasn't just because that was his philosophy. It was because they were doing things in the business that if you weren't somebody that wanted to be pushed and that couldn't handle extreme growth and crazy changes, then you probably weren't going to last for a while. But just talk about like the acceleration of the company and how it went from where it was when you started in 01 to where it was when you left. And then Mike, I want to talk to you about the midstream side of it and then how that evolved as well. But maybe start, Chris, with just like, go ahead.
Yeah. It's that's really true. And I think it, kind of gets back to like, it's like, let's come back to like this jack of all trades and like, learning by doing. And, one, I never really felt like I had someone like over my shoulder, right? Like pushing, like, you got to do this, you need to be in the seat at this time, all that kind of stuff. And that wasn't really the culture. But it was absolutely dramatic growth, and you could either handle it or you couldn't,
right?
And there's a lot that couldn't. But I think the learning by doing, right? I mean, it's like we were in new areas, we were drilling wells at an incredibly fast pace. Any system that you had, quote unquote system, right? And it's like we kind of had, initially it's a lot of spreadsheet type stuff, right? And then these rudimentary like, revenue distribution systems or contract management systems. A lot of that was just, things that you kind of, set up in an Excel folder or, something yourself. Okay, you get a good process in place. And then you're immediately, like the next month, you've got 30 more wells added to that. You've got an acquisition you're trying to integrate, and that process is broken. You've got to create a new one on the fly and get all the work done that you were originally doing. And so we're growing so much too. It's like, and then try and like, bring in some additional resources, people, to kind of help. Just that concept, I think that kind of trial by fire and just doing it, of having to like continually reiterate and like improve on what we were doing and create a better, more efficient way to do it, was just hugely impactful on just like kind of how I think about things, Right. And so when we show up at a smaller, 4 a.m. midstream and have one gathering system, at the time, it's like, I can handle this.
Yeah,
I can do this, right?
Right.
Yeah.
How's the evolution of the midstream side? I mean, you guys started off, and it changed a number of different times, not just in like scope and scale, but also structure. So, just your thoughts around how that
It did. So, when I started in 2006, you were with Simi, the Chesapeake Energy marketing group, and they were, sort of representing the producer side of things. And at the time, there was a little bit of both, and we had. Basically, I came in and right when I started, we were working towards splitting that out. Now, it wasn't public yet, but we were working within, to have the Chesapeake midstream operations department, and then, we would build the pipelines for, the marketing group and the producer side of things. So when I started in 2006, a lot of it was getting, to Chris's point, processes in place, because, we didn't have a lot of AFE processes. We were spending so much money and so much time developing all these different projects, getting some accountability and some documentation and all of those types of things. That was probably my first, 6 months to a year was getting that all done. And that ultimately did, roll into a process and a software, that I was instrumental in putting together and building and all of that. So between that and really a lot of it was just getting the younger generation, because I was the young guy at the time. You had a lot, the big generational gap in that time. You started to have a lot more young people come into the space, and a lot of my time was spent on the road, learning the business, going out, meeting with the field guys. Why are we putting it here? Why are we building this way? That type of stuff. So, to kind of fully get through it all, it was 2006, it was just getting all those processes together. I believe 2007, we were Barnett, Oklahoma type assets, and then we got into the Fayetteville real large. Then we got into the Haynesville, and it was just like we were always trying to play catch up, because as Chesapeake was growing extremely aggressively through the drill bit, we were having to come in and build all this infrastructure, at the same time and try and have this just-in-time type of arrangement that was very, very complicated and worked a lot, but a lot of times, we had to learn why it didn't work, and improve upon, the way we did things. So
for sure. Well, what I'll tell you about you guys, and this is because it's hard for people, I think, sometimes to pump themselves up and to talk themselves up because you guys are humble guys, but I'll give you my perspective of the strengths that I saw from you guys, not just today, but what I saw it back then, and then it's carried on to today. And you've gained a lot of new arsenals around the entrepreneur side that we're going to talk about. But Chris, I saw with you and your group that you guys were handling huge amounts of data, very, very different types of requests. Like we had to do all these different things. It was always like just the amount of processing all this revenue, all the different, we had affiliates, we had, assets that we were buying all the time that was a massive machine, the accounting side of Chesapeake. And it had all kinds of different things that were changing and that, you guys would improve on and things like that. But I just always remember you as somebody who was very meticulous that when I called you, I knew that you were either going to have the answer or you could find the answer. And then I was also like nervous to call you because you had so much going on your plate. And I was like, this guy is like very busy. So it was like heavy hitter stuff. Like if I really needed to know something, I could get with you and you either knew the answer or knew where the answer was and could find the people that could get me that. And so just in this giant machine of wells and volumes and invoices and a marketing affiliate, a midstream affiliate, oil field service affiliates. I mean, we had at one time, I want to say it was in excess of a dozen affiliates.
Absolutely.
Easily a dozen affiliates in all different facets of the industry. And those affiliates all flowed through accounting. And then the way that rolled through into like revenue and what we did on the marketing side and the midstream side, it was crazy impressive just to be able to make it work. And then the fact that you guys were continually improving. Mike, I think the thing that surprised me a lot about you was that I didn't know you that well at Chesapeake, but then as you and I started talking more the last couple of years, what struck me was just the breadth of experience that you've had and how well-rounded you are. Like I feel like we can have a conversation about something like an acquisition and then say, hey, look, look at this midstream system. How do you view the value of this? And you have really good insight on that. But then you've got good insight on things like operations, process management, the nuts and bolts of midstream. And I think it's back to that jack of all trade thing. The fact that you were in that place at that time with so much going on, I just feel like you're just a super well-rounded guy that can do what's needed of you. Like that's why I feel like it's good that we're working together now. We're going to get into this, but just this idea that like I can come to you with like a bunch of different topics and you're not just like, I do this type of widget guy. You're like, you get the big picture. So I think that you guys are both guys that I've enjoyed working with, and the more I've gotten to know you, it's affirmed all these things that I already thought about you. But I think what would be interesting now is to go from the Chesapeake side to this more entrepreneurial, private equity backed model that you guys had. Walk me through just the good thing, the good, the bad, and the ugly, what you learned, and takeaways from it.
Yeah.
Sure.
I don't know. I can take a little stab at that, I guess. So,
yeah. You want to start?
I saw it as like this just really great opportunity. After everything we talked about this, everything that we were able to learn and what we did at Chesapeake, and I'm like, I think in just seeing all of that growth and seeing all the different parts of the process and trying to, really dive in and like figure out like how all these parts work together, and as you were talking a second ago, it's like that was one thing that I think probably we all really liked was, kind of seeing how all these different parts of the business work together to, ultimately get a well drilled,
right.
Producing to sales, get people paid, all that kind of stuff. And so, so that was great experience. And it's like, okay, well, I maybe I can take some of that into a smaller shop and, and just jump in, roll up my sleeves and jump in a little bit. And so ran across 4AM Midstream, and surprisingly enough, the founder's name of that was Aubrey also. So it's like,
funny.
okay, it's like, well, okay, maybe there's some karma here or something that I should join this group. But it was a really good story, and it didn't end, I think, like how anybody would have loved for it to end. I mean, you want these things to end with everyone making a ton of money, and it's this big headline thing. But you had a older gentleman, kind of in his retirement years, quite honestly, who, had spent a career on, pipeline construction, project management, and literally was welding pipe when he was 18 years old.
Wow.
And so, just connections in the industry and know-how. I mean, we were driving to the bank one day, and we're driving down the road, and he's like, "See that riser right there? Yeah, I did that one. Like this one, I did that one." So that was pretty cool, and he was a really good guy. He wanted to create something, wanted to get on the ownership side of it and try and grow a business, owning and operating the assets instead of always building them, basically. So, met up, or he found private equity money. And, they were taking a gamble on, the oil patch in Oklahoma. And
what year was this?
This was 2017.
Okay. Yeah.
And so, you kind of think about it at the time, stack production was kind of the thing.
Right.
And this was, kind of on the fringe of that, and then was positioned really well, just from a geographic standpoint. And so I think they took a gamble that, it was, use this asset and, maybe grow some things around it and, could kind of turn it into something and then flip it. But I think, working through that whole process of, how the investors thought about the business and how I talk about Aubrey as the founder, I mean, through and through operations guy, right? I mean, through and through, and, hands-on doing the work. And kind of working through those kind of different dynamics in the business was an experience for us, for sure. And I think we learned a lot from it. It had its great times. It had its bad times. Anything and everything that could go wrong in the oil business did over the past 4 years, right?
Before you jump in, Mike, yeah, exactly. Before you jump in, Mike, think about the arc of, if you had to think of like the trajectory of like the private equity world the last decade. So let's say from 2010 to 2020 when COVID hit, you would kind of view it as, in my opinion, like a bell curve where it kind of had this peak where it sort of rose and then it dropped off. And I think you can measure that in a number of things. You can measure it in like the amount of teams that were getting funded for upstream and for midstream. You can measure it in the exits that people were having. I think that those two were tightly correlated. Like, for example, in 13, 14, 15, 16, there were some really big exits and really big valuations, which was also followed by waves of teams getting funded. So, I mean, we used to joke around, and it was like, can't swing a dead cat without hitting a new management team that just got funded by, that's a Markism. I don't even know what that means, but that's something that he would say, without hitting a new management team that got private equity money. And I think that it got continually challenged over that time period, and there were a number of things, and we'll talk about midstream, and this is where I want to kick it to you, Mike, but I remember in like 12, 13, 14, around especially the time when I joined AEP, which was like end of 13 into 14, midstream fees, and I'll use those as a proxy of how competitive midstream was. You could see fees that were regularly in the $+ range, and by that I mean like gathering, processing, compression, treating, whatever it may be, $1.20, $1.30. Part of that, I think, is that prior to this era, the 2010 and teens, you had a lot of POP stuff, and so that was kind of a proxy. And if prices were higher, you had like a percentage of proceeds, and that maybe equated to that $+ number. Fast forward to today, it's not uncommon to see fees all in at 60, 70 cents. So a decade of inflation and half the top line margin. And so that was the competitiveness of it. So, Mike, you were the chief commercial officer of this entity. Just your view on midstream from the time you guys got in to where it went. The good, again, the good, the bad, and the ugly, the struggles, the things that you thought were positive. But I know you guys looked at a lot of the same acquisitions that we looked at the time. But just your general thoughts on that space and how it evolved while you're there.
Yeah, no, good question, and it was a up and down, 4 years or so. I think, we looked at a lot of great deals. And I think from the pricing perspective, I think there were several different competing, things going on. You had a lot of teams looking at assets over that time period. Right. You had this increase of these fees and this competitiveness of the business that, made it a little difficult for folks to ultimately exit as the business got to a point of the timing of wanting to exit. You had the COVID hitting, and you had all this different, macro level, oil and gas noise, whether it be, just the general theme of the world at the time and all of that. But as far as what I viewed in the space, it was, you almost had, you had this, you had all this infrastructure that didn't necessarily all need to be there
Right.
for the supply that was, call it from 17 to now, declining,
Right.
and it was just the ups and downs, to your point, the bell curve of the business and all of that. But one thing I learned, being in the role I was in, was the amount of flavor of the day, groupthink, whatever you want to call it.
Yeah.
When you're pitching this to all these different investors,
Right.
you're really hot until you're not. And we had this scenario of, we thought that a lot of times the economics made sense, but a lot of times it was just, we'd moved on to something different. And at the time it
Right.
was ESG, it was more green stuff, whatever you have, not necessarily because the numbers couldn't make sense. I mean, in some instances they couldn't, but it was just this thematic change, or this sentiment of how things, played out. That was a big headwind I think we ran into, a lot.
Yeah, that was. I mean, it definitely changed. I mean, I think probably pre-17 at the very early phase, there was, in the collective investment community, a bigger desire to put money to work in oil and gas,
Right.
and it was going into a lot of different areas, a lot of different projects, and so the kind of theoretical rate of returns that you might be able to get on projects, they could be a little bit lower, right? And it's and the enthusiasm was there. And then as that really investment dollar, I mean, completely went away from the space. I mean, just completely went away from the space. Having just the conversations around, can we get more people to kind of come in and help fund this deal, those were just difficult to have to begin with. Like the sentiment was gone to invest in the space.
Right.
And then on top of that, it's like we talked a lot about, like, just bid asks. It's like you had, deals that could look good, but they could only look good at like a number that we would be putting out there, and it just wasn't enough to get like
Right.
The buyer or
Right.
the seller off center. But yeah, the ebbs and flows of this have been amazing. And I don't know if it feels like maybe a little bit of an inflection point of some investment dollars coming back into the space.
Yeah.
I think one thing from your question about the fees that a lot of people may not totally comprehend or think about a lot is that while there are fixed fees, the POP versus the fixed fee model of midstream.
POP is a percentage of proceeds. For people that don't know, they keep portion of the product as part of the fee for the midstream, just for anybody that doesn't.
Yeah, and to get back to my Access Midstream days, my Williams days, GIP was our big sponsor, and that was a big no-no. It was fixed fee, no commodity exposure, et cetera, et cetera. And I think a lot of people really got overly excited about that, quickly forgetting that your producer is fully exposed to commodity prices.
Right.
And if commodity prices dive or jump, one way or the other, you're going to see that flow through your system increase or decrease. And that was one thing that I think a lot of folks wrestled with during that downturn was, well, our fee is fine, but rate times volume equals your revenue. And if your volume was decreasing, even if you had a rate that you thought was market rate or substantial enough to satisfy the needs of the business, you were only as good as the producer that you were servicing. And if that producer was hurting, they may come to you for rate relief. They may come to you and say, let's restructure this deal. They may come to you and say, I can't afford your rate, and you're in a tough spot there as a midstream company trying to help your client who's the lifeblood of your business.
Right.
And I think that's one thing that was another headwind in the space. And frankly, yeah, on the bid ask, to Chris's point, I think that whether it was COVID period of extremely low prices, prior to that, this sort of, I don't want to say stabilized price, but maybe a more, what we would call middle of the road pricing versus now, which everyone, it's like everything's on the high side. I think you have this idea, and two people's idea of what the future is going to look like is never the same.
Right.
So that was a big challenge, from the midstream side. You may think, okay, well, your fee is fixed and it's escalating at a CPI, and gosh, with that where it's at right now, that's good. But it's like, well, what is the supplier going to do in the next 5 years? That could be wildly all over the place and generate net present values of assets all over the board. And so without that fundamental sort of agreement on a buyer and seller, you are really setting yourself up for a potential of a bid ask that may not be able to be met. And that was what we kept finding.
I love that. I want to talk about the deal dynamics, the bid asks, and what was driving those, and we'll get in the weeds for the people that care about midstream stuff. And there's some really cool topics I think we can hit on here, but wanted to go back to something you said earlier around this, what I've always called kind of this symbiotic relationship between midstream and upstream. Mm-hmm. And I don't think that either party, I think both parties can get lost in not viewing it like that anymore. I think midstream and upstream deals, when you do these midstream deals together, I think these are the epitome of needing to be a win-win. And I actually think and that sounds like a big, warm and fuzzy, like win-win. That's just a cheesy thing. But no, I think it's actually critical to have win-win, because I think that win-lose in midstream deals, actually, it's lose-lose. And that's actually, some people would argue it's in all deals and all negotiations, but I think especially in midstream deals. And it was hard for us because we had a business where we're giving advice on people to do these deals. And so you've got different types of producers that we're representing that want to work on midstream deals. And some guys, I think, really saw the value in this symbiotic relationship. Like, you even have guys being like, I don't want to cut the fees too low because I want them to connect my wells and I want my oil to flow. Mm-hmm. And then you've had other groups that their philosophy is like, I want to screw these guys. I want to get the best possible deal. Like, I'm going to beat them up so bad, there's going to be nothing left. And it's like, guys, you realize you're stuck with this person basically forever once you sign this contract. I mean, the nature of these agreements, a lot of them at the time were doing 10-year, 20-year type of commitments, and you want that person to be, beat up and bloody by the time they sign the contract. And there's a counterintuitiveness there, right? It's like, you did such a good deal that you did a bad deal. Mm-hmm. And so there's this idea that I think that the best deals are the deals where both sides feel like they didn't get the best deal, right? And I think in midstream, it got extreme. I mean, the pay-to-play stuff that was going on, people were paying for acreage dedications, people were paying for spud bonuses. I mean, these are huge investments in time zero that sometimes take 5 or 7 years just to break even, and you're layering in like incentives and bonuses, and you're cutting the fees to these ruthless levels. I think a lot of the more sober participants in the conversation, which I would consider you guys in that bucket, we would call each other, Mike, and talk about some of the stuff going on in the industry, and we'd just look and we'd say, these people aren't making money, they're doing bad deals, and it's really hard to compete because we're trying to do good deals and actually make both party monies. But I'll stop there just on the dynamics of what was going on at that time and just the fever pitch of the competitiveness. It just seemed like it got to a crazy point.
It did, and to your point of these conversations, is it's like, several times we're talking, we're like, gosh, I feel like I'm effectively buying this asset at, PV0 on my bid, and it's getting thrown out. And it's, who are these buyers that are coming in? And and the answer to a lot of this was deals were not transacting. Right. But in other situations, I'm not saying there were bad deals, but maybe there were strategic reasons to do certain deals, and that was something I think at our company, being on the smaller side at 4 a.m., we lacked the ability to do some of that type of stuff because we didn't have the scale necessarily to say, hey, let's buy this business at maybe not necessarily a loss leader, but maybe at like a PV0 type of valuation, because we'll be able to boost, we can make our economics on this piece of business, whether it's downstream or another business segment, be able to make up the economics there, and the all-in economics justify an investment. That was the deals that were getting done. Those were the deals I was seeing get done.
Yeah. Well, the flip side of this coin is, so that you got the really aggressive midstream bids to get greenfield stuff built. And so for greenfield, for people, these are new assets that you haven't broke ground. You got to build a new pipeline or a new compressor station or a new processing plant. And then you had the flip side of this coin, which was the public companies that had assets that were just completely neglected. Like, I don't know if there's any other word, and I'm not trying to be mean, but I think they would admit they have assets that are just neglected. I mean, the big guys of the world, they've got so much. They've got those downstream components. They've got trading shops. They've got NGLs. They've got all these things. And then they've got, thousands of miles of pipe that's sitting there in, Oklahoma or the Texas Panhandle or some other place. And they're not even like getting in and getting competitive and bidding on anything. And then you go to try to buy that from them and you can't buy it. So I don't know if you guys, your struggles around that too.
Yeah, I think a lot of that depends on, sorry, Chris, I'll let you go in a minute, but I think a lot of that depends on the size of the company, and the sort of culture of the company. A lot of people just don't want to mess with it. It's like, why stick my neck out and try and sell this piece of pipe? I think all the numbers make sense, but gosh, my manager's going to say, why are you spending time screwing with this small dinky piece of pipe when I've asked you to go do this, or this? So,
Chris, your thoughts on that dynamic?
Yeah, no, I mean, I think kind of similar, and it just they have scarce capital as well, and they're allocating it to other areas, but then, I think in a lot of cases couldn't quickly see that by divesting of this particular asset that, it's being operated well, right? I mean, it's, they're doing what they need to do on a daily basis, but it's not getting investment, love, if you will. Divesting that, it's actually better for their bottom line, and or saying, well, I want to get that and divest it at the same valuation as my prized possession that I have, and which, the buyer's not going to come in and do. That was difficult to get over, I think. I mean, I think we saw a few struggles there, and I don't know if some of it, is like kind of like what you were talking about, like, it's just, is that the best use of my time? It's not losing money for us, and it's like, well, I don't want to spend any time on it, or just kind of not seeing the value, and like you can kind of shed this and actually make your company stronger in the end by doing it.
The vertical integrated nature of these companies, and by these companies I mean midstream companies, made it difficult because, and this is a banker explained this to me, an investment banker, when we were looking at an acquisition. And it is, okay, the public market values XYZ Williams or whoever, pick on them because we've worked for them, values them at a 12 times multiple. Why would they sell assets that are a lesser multiple than that? Because that's going to be dilutive to the company. But the reason why they were valued at 12 times, you have to kind of take it even further step back. Like midstream is, in theory, one of these investments where you can make a large capital investment up front, but then once you have the footprint, the incremental capital needed to scale is low in theory. So it's a cash flow machine. Like historically, in older midstream deals, by older I mean kind of before this last decade, they had a lot of risk mitigation mechanisms in them. And especially downstream deals is take or pay, which means you have to either, the producer has to commit and they have to pay, and if they don't have the volume, then they have to pay. And so you get these premium valuations because of that. In theory, it's this highly scalable business with little capital once you make the initial investment. Yeah. Well, as we know, that's not always how it plays out. And specifically when you look at gathering and processing assets, which you guys were focused on and we have a lot of background in, it can be quite the opposite sometimes. You can, just because you have a system, that's great. But if the new drilling is a township over, you're having to lay material pipelines, you're having to lay set compressor stations, you might have to expand your plant. And so for a lot of these assets that should be spun out or sold, they're looking at that premium multiple and saying, well, my cash flow is getting, this value in the marketplace. It's like, but you're getting that value because you own Transco, right? Like you own these other big assets, these long haul assets. And so that just made it very structurally complicated to do a deal. Yeah,
no, I agree. And that's kind of exactly what we're saying. And it's like, and then that scarce investment dollar within their company, it's like, so are you going to be able to go and allocate what maybe is a smaller, return type project to go and chase that new development that's a couple miles off your system? It's probably not going to get that capital. Where the new group coming in and buying it, that is their only focus, and for them it's a high return deal. Right.
Yeah, so pivoting from I love that conversation and I'm glad we got to do it, but pivoting to like the entrepreneurial side, and we'll talk about oil and gas and you guys coming on to Ancova. And but I want to talk about some of the other things you've done, and I don't know if you're open to talking about it, but some of your investments, like the Coop thing, I think you've been open about that. Is that something you talk about publicly? I don't know, but that's a cool entrepreneurial story. And then I want to talk about Woodworks and what's going on there. I don't know how much we can say, but I think it's kind of out there. But you guys have done some other cool, interesting things, and we're going to do more at Ancova. But just your background in entrepreneurship and what drives you guys to build more things.
Yeah, no, I mean, I think, I'll jump in here real quick. I mean, you probably hear a little bit of it in how I talk at the beginning of this. It's like, I personally, love seeing Oklahoma City grow and, just continue to become like this great city to live and have a family and grow up in. And so, I mean, I'm from Oklahoma. I grew up in Tulsa and, kind of came here for college. And, when I first got here, now at that point, 25 plus years ago or something, it was not the city that it is today. And, I think it's a place where you can, actually help, mold and shape what it is. And not every city's like that, but you've got that opportunity here. And so that's this kind of like, maybe romantic vision in the background of like where I think some of these things have, come together for us. But, Coop as an example, and, I will be very clear, I take zero, of any, responsibility or anything for what Coop has become. I mean, those guys have done that. It is unbelievable.
For those that don't know, it's a brewery.
It is. Yeah, it's good point, Max. Like a local Oklahoma City brewery. I mean, I think 13 or 14 years in now. And the crew there, the founders, and everybody that's working there. I mean, it is unbelievable what they've accomplished, and so I don't want to take any credit for that.
But you did like make some of the first batch of this beer like in your garage, right? Like this.
Well, yeah. So what's funny is and again going back to kind of connections. So it's like through a leadership group that I was in, made a connection with someone in that group whose friend was looking to start a brewery. Got to know them a little bit, and literally made a batch of what is now Horny Toad. We made that in his garage and, gave that out as a wedding present at our wedding, before Coop started. But, so yeah, I was lucky to be one of the first investors there and, and it obviously turned out really well. But the story of it, right? It's like the market was changing. People are starting to, venture out into craft beer type products. We didn't really have much of it here in Oklahoma yet.
Right.
And they were kind of at the start and then did a great job of executing. I mean, it's an unbelievable team. But it kind of goes with like the growth of the city, and they've done a great job on top of it. And then, I think we're a few weeks out from maybe being able to talk a whole lot about the distillery project. But really kind of the similar inflection point, and really kind of through the Coop guys, met a gentleman that, had a vision for years of starting a distillery and, had a ton of experience in the industry, in the spirits business, retail, distribution, all of this. Also had a book publishing experience. And so, you kind of hear the story of, wanting to tell a story through every sip, every bottle, right? And, there are a few good distilleries in the state today, and they're doing a really good job. But it's kind of the similar inflection point of there's not, as many as other places in the country. So, that was a pretty cool experience to get introduced. You got a guy with a great idea, very capable, and what is he lacking? Money.
Right.
And so, we're not yet to the position in our lives where we could fully fund any of these things. But, we know enough people that could maybe help and maybe share a similar vision. And so, yeah, that to me is really gratifying to, help pull together different people that we know and make an investment in something, and it's a bet, right? It's like, I think there's a good chance that everything's successful, but putting businesses and helping businesses that really contribute to just kind of life in Oklahoma City. That's a very romanticized view, but that's what kind of drives me on that part.
Absolutely. Well, when we first started talking again recently, it was in context of the midstream stuff, but then also this distillery that I'm going to pump up big time once we get all the approved marketing materials, and I'm excited about it. But
we're close.
Yeah, that led we are, and that led into talking about the other ways to work together. And kick it over to Mike on this one. Just thoughts around you guys coming over to Ancova for people that are listening. Chris and Mike have recently joined to help primarily in BD, so business development, looking at growing the company, looking at different opportunities, but just your guys' thoughts around leaving 4 a.m. now and then what you would like to build into the future.
Yeah, no, that's a good topic. So, I think coming over from the exit we had with 4 a.m., that was, sort of late last year. So had a couple of months to think about what I wanted to do next, and am in the distillery as well with you guys, and really kind of caught that entrepreneurial bug through that. And frankly, my history probably a little bit less so than Chris. I was not in the Coop deal, and was have always been investment into traditional investments, and spent my first nearly 16 years or so in bigger company environments. So I've built up good sound base of investments, and really got me thinking more about what I wanted to do in the future. I've got a lot of life left to work and all of that, and how I can have more fun and be more involved with my investments. So that may be a long-winded way into Ancova, but it was I like your guys' entrepreneurial spirit. You guys are into a lot of different things. I am afforded the ability to kind of take control of my career a little bit, so to speak, and didn't want to jump straight back into the workforce, and wanted to find a way to be able to have that balance of being able to do all these different businesses, but also my core business, which is oil and gas, and you guys being very, very involved in that. Being able to bring a lot of my contacts, my experience, my desire to be in the space, and help you guys grow the business, and find a way to be able to work with everybody going forward. So
well, you guys have specific knowledge, and I'll kick it to you here in a second, Chris. But you guys have specific knowledge through the reasons what we talked about, through these experiences. You guys have you can create value with that specific knowledge. And so, and I've said this before, and I think I stole it from Naval Ravikant, because he talks about some of this entrepreneurship stuff. But basically, I think where you guys were at, and I'm projecting, is that you knew you had this knowledge, and you're in this quest right now to quantify what that's worth and that value of that knowledge that you've gained over these years, and then figure out different forms of leverage to amplify that so you can capture that value. And I think that when we were talking, it's like, look, I already knew you guys had a lot of knowledge, which I know equates to a lot of value. I think the exercises we've gone through over the last month, we've been trying to calculate that value and understand that value the best we can, and where those value propositions are. And then I think the combination of you guys coming over to join us was that, how do we amplify that? Mm-hmm. How do we take what we've got going on and combine that with your guys' knowledge, and then let's build something? That's the way I viewed it. But Chris, I'd love to hear your thoughts on just what you're trying to, what you want to do with this journey here.
Yeah, no, I mean, I think that's kind of a good way to put it, like kind of amplify, right? So, I think you kind of hear it in kind of ways that we're talking, and I've got this romanticized view, I probably will, of a lot of things, but I love helping, and I like helping small businesses. I like helping the groups that I'm involved with, and you kind of take it into the oil and gas space. And, I mean, I think we can use 4AM as an example. It was a very, very small company. I mean, a great experience there at the end, I think we were under 10 people, and half of them are in the field, and, you kind of know everybody there. But and that's an extreme example on the small side, but in small companies, you only have a few people, and those few people know what they know, right? And hopefully over the years, we've all gained, especially, in this particular space, just trial by fire, and by doing a lot of things, we've seen a lot of things, and we bring an experience set that is kind of unique in the oil and gas market. I kind of think of like the value chain, like, after you get a well up, drilled, producing, all of the amazing work that goes into that, then you have to get that product to a market. And there's so many things that go into that kind of midstream and marketing space. And not every company, has, all of that experience set right there. And so, I mean, if we can go and, collectively through this broader group that we have here at Ancova, if we can help some of them in that space and get a better value for their product, make win-win type deals between, marketers, midstream companies, producers, that grows everybody and helps everybody become more successful. Right. That's something I think I'll take like a lot of personal satisfaction from. And so, I think the things that we've seen over the years, just on the amount of wells that we've been involved with, contracts we've been involved with, some of the pitfalls that come up and the mistakes that you can make, and like how to kind of recover from that. If we can kind of share that and help out some companies, I mean, that's what we're trying to do. And that's from the oil and gas perspective. And then, I think it can turn into, okay, well, some of those skill sets translate into other businesses, know, in the city that are not in oil and gas. But know, again, it goes back to just I think helping companies and helping them grow.
Yeah, absolutely. And like and I want to talk about some of the different things that we've brainstormed over the last few weeks, because it's just been recent that you guys have joined. But where are like the pain points is what we're trying to figure out. And we know where they are because we've worked in the producer side of the business, and most of our clients are producers. We haven't worked in midstream too. Mm-hmm. I think that one thing that sets Ancova apart from other people in the space that we play in is that our collective experience doing, like you mentioned, connecting all those wells, doing all these contracts, building all these systems. We're part of the grassroots of a giant midstream operation. You guys were also part of the grassroots of a small one. You've been on both sides of the table, and I think we've learned a lot. I think there are a lot of people in the marketing space or the midstream space that have a very narrow view, right? Like a lot of like companies that are our peers in this space, they come from like a trading or derivatives background. It's more financial, it's more downstream. Mm-hmm. And I don't think that they understand the different pain points like we've discussed. But Mike, you've made some good points recently, kind of this from the wellhead to the sales point, all the different things people should be thinking about and how you can bring that knowledge to help them.
Yeah, I mean, I think, you hit on it with the butting of the heads of the midstream and the producer, and there's got to be some win-win. And I think being on both sides of it, you can help articulate resolutions to these things. But, to the definition of what we're talking about here, it's basically, I mean, you've got a midstream system, and you generally have to compress that gas in that midstream system. You have different, if it's rich gas, you have different fallout from pressure changing. You have processing potentially, depending on how the gas quality is. And there's just a lot of logistical steps throughout this process to get to that ultimate residue sales point that, I think a lot of times people don't fully grasp what that is and how those different segments add up to potential value leakage or attaining value, depending on what side of the table you're on. And I think having clear and concise expectations up front on a lot of these types of deals prevent this potential for disagreement down the road. So I don't know, Chris.
I mean, like the communication there too, kind of upfront communication. Mm-hmm. I mean, compression is a great example, right? I mean, go back to like win-win type scenarios. I mean, you wouldn't really want your midstream company to be, at over capacity on compression. They're probably losing money. Your fee is going to be higher.
Fuels are worse.
Exactly. Yep. Fuels are worse. They're not running at the efficient level that they need to, those compressors. And then, but if you kind of communicate back and forth, and I think that's something that Ancova, has done a good job of, and, with kind of the collective team here, you can help to mitigate some of those things and help really both sides plan, and.
Yeah, I mean, everyone's busy, and a lot of times, in past lives, we found, why is the suction of the compressor set at whatever point? What does the wellhead pressure need to be? Why are we running it with this, or why are we doing it with that? And a lot of it was, that was just the way it was done at the beginning.
Right.
And I think continually reviewing that type of work and making sure you're not wasting, energy or wasting, whatever it may be, is important to make sure that both sides are capturing the value that they need to be capturing.
And I think that like 90-something% of the margin in your product is made between the wellhead and the downstream piece. I mean, and some people may argue with that. I don't know. That's not an approximate number, but it's a very, very high percent, especially, you know, when you have things like midstream fees and fuels and you know, this stuff matters, and it's a huge value add that I think a lot of groups can gloss over. And, you know, I think this is something that we really set ourselves apart by being able to know that side of the space, know the producer side, understand like the performance things that need to be in contracts, understand where the value leakage is. You know, look, at the end of the day, the downstream component, there are a couple dozen probably markets in each basin that are legitimate markets that are good to sell to. Now, you can always go further downstream, and the further you go downstream, you can access and unlock more markets. But the reality is, producers typically sell to middle markets. There's only so many of them, and the difference between these markets typically, all things considered equal, like if they sold it the same, if they sold on Gas Daily or on iFERC or however they sold it, like all things considered, these markets, the differences between them are very small. And so what we found is that I believe the model that we've structured is the best model. I'm biased, but that model is more of a price discovery and an outsource model where you bring the expertise to this producer, help them navigate this. And, you know, you guys were in a meeting with me the other day, and this is probably one of the first true pitches you got to hear me give. And they asked us, they said, well, you know, I've had other XYZ company come into my shop, this other company come into my shop, and they're promising me they can get me better pricing. And we've always said, in my response to that is always like, you know, if they knew what the price of gas or the index price was going to be, like they'd be richer than anybody else, and they wouldn't be here today. So it's like this idea of being able to promise somebody a better price. I think what we're, you know, offering is that we're going to promise that we'll find out what the prices are, and we're going to navigate that for you. And if we do find a market with the best price, that's where we'll sell it. But that's our job, is to do that price discovery. I can't in the future say that like we're going to guarantee this index will be better than that index, or that iFERC is going to do better than Gas Daily, but trying to bring what I would call extreme transparency to this process. I think you guys have resonated with that message. We'll see. It doesn't always work to gain us business. We're hoping that we can get more though with that business, with that model.
Yeah, I love being transparent with it, you know, and it's like there's a bit of you know, education maybe in a way with that. It's like, you know, here's, you know, and that's really what you're getting, right? It's like, you know, going back to a smaller company or a mid-sized company, and you know, more than likely, if it's of a relatively mid-sized scale, you've got people that have some experience in the space. And, you know, and I think in those cases, we probably can like augment what you've got someone in the company that has some experience. We've got a team that has all these different collective experiences on the marketing side, on the scheduling side, on, you know, just daily commercial services, producer services, you know, the pitfalls of like how this all gets back to a royalty owner, just, you know, all of these things. We've got a lot of that kind of, you know, in different people here on this team. And so we can kind of bring all of that, right, to these companies as part of this overall kind of, you know, marketing and producer services, marketing, you know, shop, if you will. But, you know, being able to kind of work through that process in a transparent way. And it's like, no, to your point, I wish we could like predict exactly where prices were, because we would just, you know, individually front that and make a ton of money, right? Yeah. But, you know, you can't. I think you can kind of have some, you know, general opinions on like directionally where things go. We can provide that feedback to the company. And then, go out, discover what, you know, what the best price is in that area. And then boom, you know, we're going to sell it to them. And then, you know, you're getting that. And then kind of here's the fee. You know, and then all the other services that kind of go along with that, right? It's not just getting it and selling it to somebody. Right. All that daily work that goes in, you know, to making sure that the well is connected, all, you know, the contracts are in place, you know, fees have been escalated or not correctly, you know, all that communication with the pipeline company just to get it there is really important too, you know. So I may be overselling.
I learned a lot about that, you know, in my latest stint, you know, at Access Williams, you know, working in the gas management, gas scheduling world, is it's an everyday, multiple times a day, exercise, depending on what basin you're in and how much volumes you have. Talking to your markets, making sure your volumes are getting confirmed, talking to your gas control department, making sure that the physical, for people that don't know, gas control being the guys, whether it's in, a basement or an office, in the area, they're the 24/7 looking at the product, and they're the ones that basically talk to the different pipelines and say, hey, let's shift volumes physically from here or there. So it's a well-oiled machine, a lot of times where you're working with these folks, where you need to make sure that nominations and planning goes all the way downstream, and that you're talking to all the right folks to make sure that the gas shows up at the home that it needs to be. And depending on what basin you're in, depending on the pipe and how tight it is, and how much volume you have, it can vary, but it is a logistics exercise to get gas, across different segments of pipe, and not that people don't know that, but it's something that I think, having that experience can be very, very valuable in recognizing the pitfalls and what may go wrong, or what a good process looks like even.
Yeah, 100%. And I think alignment is huge with what we've done at Ancova, and I want to kick it at the end of the conversation here. We'll talk about maybe some new things we'd like to explore services-wise, offering to people, because we've had some ideas of things that we can do given our backgrounds. But back to this other point that I want to hit on, it's just around alignment, right? Like knowing that like we're on the team, the same team. Mm-hmm. There is 100% a place for market makers. There's 100% a place for risk takers, for people arbitraging transport. These are all things that need to happen for an efficient market, because without it, then the producers would be doing those things, and they wouldn't be able to easily produce. They'd have to focus on all this other stuff. And the big guys do. They go downstream. They take out these risks. They take out. They get new pipes built. They go in arbitrage markets. They go to downstream users. So I think these participants are vital for a healthy oil and gas industry, where we've decided to have a line drawn in the sand is that, if we're going to be giving people advice and we're going to be sitting in someone's corner, that if we are also playing that game of arbitraging, that means that we have financial incentives that are hidden from the client that they don't know about, that are driving our decisions. And we felt very uncomfortable with that. When we looked at this space, we said, we don't like that. And so this extreme transparency, whose side we're on, fixed fee everything, no affiliate transactions, no downstream bets being made. We'll talk to all those people and we'll figure out which one is the best market. So that to me is the differentiator. I think it's hard to some people that don't understand, it's hard to articulate that, but this is like a conversation we've had a lot. And I'm not saying, again, those people are doing something. We need those people that are taking these arbitrages, right?
No, absolutely.
But I think our clients, what we're trying to say is that you need someone to help you navigate that. Mm-hmm. So to me, that's like the key thing there. But what other things that we could do? Like when you look at small oil and gas businesses, what about like just the back office side of things, the efficiencies around accounting, like all this different stuff? I mean, you guys have a lot of experience running that type of stuff. I mean, there may be other segments we look to offer, CFO in a box type services, maybe want to help people with financial stuff. I mean, I don't know. We've kicked around a lot of ideas. I'm not like announcing that we're starting any new business segments here, but I think that as we sit with people, we're trying to understand pain points, and we're seeing some that we could probably help with.
Well, maybe we can make those announcements on a future segment here in Talk Energy, right? But yeah. No, I mean, go ahead. Yeah.
Oh, I was going to say, I think, just different, daily, weekly, monthly, whether it be, preparation work, like accrual type work, or whether it be, closeout work to invoice, whether it be just daily allocations, managing imbalances, having worked, in the different, sides of the midstream space and on the producer side. I mean, there's just a lot of these things that maybe aren't as sexy as some of the other, things that people gravitate towards in the business, but they've got a meaningful impact. And, I know when I was at Williams, a big meeting I had to go to monthly at my previous job was the imbalance meeting, and there's a lot of variables that go into how a pipeline imbalance works. And for those of you watching, it's basically what you nominate versus what's confirmed. And if you have operational balancing agreements, sometimes they'll give you credits. So you have this credit debiting mechanism. Sometimes you'll have imbalances with the pipe. Sometimes a pipe will have different imbalances with two different customers. And depending on whether you're settling those on a regular basis or whether those are rolling at market rates, you can get yourself into some exposure that you may not know you even have. In the quick run up we've had, a lot of people, if they're on one side of the ledger versus the other, may be thinking, well, gosh, now I owe this guy this much volume at $6 gas when I thought it was booked at $3 gas or $2 gas. That's a huge swing. Right. So just managing that regular cadence of work, I think, is something that for smaller shops, we've got a lot of experience doing. So
sure. Yeah. No, and we talked kind of on the producer side, back office side, and obviously a lot of experience there. And, I think, and as we're diving in and just start kind of initially starting to see, like what kind of data do we have? What kind of data are we, able to provide?
Right.
What's the format of that data back to the producer? And then, so, I think that spurs some ideas, it's like, that can be a pretty complex process to, correctly get value from a downstream sale back to a well, and do it in a manner that captures the various details of that value, fees, processing, fuels, etc., so that it can be appropriately handled, all the way back at a revenue distribution side. So that really takes it all the way from like a final sales point in market, all the way back to a royalty owner lease. And so we've seen a lot of things obviously there, and it's I don't want to announce anything, but it's something I think that we'll be able to look at and see if there's something that we can do there to help. And again, the really big companies, they've got these departments, they do this, they do a good job. I think there's a niche that I think we might be able to help in. So we'll kind of see what evolves there, right?
Yeah, I think too, like market intel, we'd love to do more content. We've talked about revamping the newsletter. We've talked about even doing more of this stuff, maybe shorter form. This is kind of for people that really want to listen, and maybe we'll clip some of this out. Maybe we'll clip this last segment about the Ancova stuff to make it bite-sized for people. But I think just more education, right? Mm-hmm. And then showing that with education, you can show that there's value to be had. Again, it's how do we amplify it? So I'm excited about you guys coming on, and I'm glad you agreed to do this. I know it's a little outside of some people's comfort zones, but I would like to do more. I think you guys have a ton of knowledge that we can share with people and help people out. Not that this is truly an advertisement for us, but I thought you guys also have great stories too. So thank you guys for coming on. This has been a fun episode. We're gonna do more stuff, but I had to get it started somewhere, so I'm glad you guys agreed to it.
Yeah, no, thanks. It's been fun. Appreciate you having us on.
Yeah, good way to break in here. So first podcast is in the books.
I know. Man. Soon, once we get the distillery up, we need to do one there. That'd be a cool place to record.
Oh man, I 100% agree. I feel like we're teasing it a little bit, but
I've teased it a little bit on Twitter. I don't know if that was appropriate. I teased it, posted a couple pictures, and then there was like, hey, we're gonna get official marketing material, so I've kind of had to hold off, but I wanna pump it out.
I've seen the prelim. It's looking good.
People are excited. I mean, it's gonna be it'll be a fun investment, and I think it'll be good for the city, especially what they're doing with that part of the city. But we'll be back, guys. But thank you guys again.
Yeah,
thank you.
Thanks.